Welcome to Limit Up, the weekly capital market podcast. My name is Don Collins. I'm a chartered accountant and business advisor of 30 years and a partner of Findex, a leading financial advisor and accounting services firm based in Australia and New Zealand. Today, I'm here again with Ian Reynolds, trader and investor, former bank foreign exchange market maker, early investor in Bitcoin and tech founder.
Hi, Don.
Ian, the last week we've seen a number of things happen. Silver hits an all-time high.
Yep.
Equities are consolidating again at their highs. Bitcoin previous weeks had been going down but has rallied. Japan appears to be collapsing, and there's the Chinese trade data information has come out as well. Be good to unpack a number of those sorts of things.
Yeah, absolutely. So Friday had a new high in silver.
Yep.
Friday, London metal markets, they managed to hold it down. Markets are getting increasingly thin, so it's going to be increasingly hard to keep a cap on it.
Sure.
Massive shortage. Could go up quite a lot, but equally in a thin market, they could go and really hammer it down to $40 or something,
right,
from $59.
Yeah.
$30, I think it hit on Friday. Equities haven't really been doing much, just hanging around their highs. Bitcoin's had a good rally, which I'll show you when we look at the charts.
Yep.
I think into year end, it's going to go up a bit, just because players are short.
Sure.
Japan. Now, before you say to me what I'm going to tell you is in complete contrast to what I said last week.
A week is a long time in the markets.
It is, that's right. So last week we were talking about the repricing of financial assets,
yes,
like government bonds and the yields associated with those bonds and the currency. We've seen some data in the last few days that is a big hole in the Japanese economy.
Right.
So we've seen minus 2.3% annualized GDP third quarter.
That's a big negative.
Yeah, and consumer spending down 3% or 3.3% it is year on year.
Right.
So, whatever those numbers exactly mean, those are really bad numbers, however you look at it, right?
Yeah.
And so, in some ways, that I was right, possibly, in that the markets are repricing things because they should be repriced.
Yep.
And while the doomsayers are over there are yelling it's the end of the world for the financial markets.
Yes.
Maybe the Bank of Japan knows these numbers, well, I'm sure they did. And that, okay, so rates can go up, but they won't go up a lot more because they don't have to, because they're in a really bad recession.
Right.
So we'll find out what happens with this, because rates can't go up too much, otherwise they can't afford to pay their debt. So what the exact fine engineering of it will become evident in due course.
So I won't hold you to something for this week on the Japan market.
Yeah, it could be completely different.
Very good. And on the China trade side of things?
Yeah, so that came out today, and analyse its $1 trillion surplus from China. So $1 trillion of goods are going somewhere in the year.
Where would they be going?
A lot of it's going to Europe, and Europe's been talking about putting tariffs on certain Chinese goods. They're clearly not going to the States. They're just going anywhere they can go. And
so there's demand in Europe for that, for them to be selling.
Well, when you talk to big manufacturers, you would know, trying to find out exactly what's happening is difficult, right?
Sure.
Just because you've delivered them to a port in England, let's say, doesn't mean to say anyone's paid for it.
Sure.
Because they ain't coming back either.
Because that goes, when we talk about the last month or so, and we talk about UK data and Europe data, that doesn't suggest a very positive running economies there. But what you're saying there is transactions occurring, but maybe not as quickly as what it would appear.
Well, I'm actually suggesting they're just shipping it there without having sold them.
Right.
Which is one thing. But if you look at, I can't remember exactly what the data was, something like, I think it was the UK. If they sell an EV in the UK, it's still at the cheapest price in the market.
Yep.
So, it's still 4 times the price of it being for sale at the recommended retail price in China.
Wow, that's a big difference.
Exactly. So there's an enormous margin there that it can squeeze by before that stock is thrown away.
Right. Okay.
But someone has still got to buy it. Right?
Yes, you've got to ship it. At the end of the day, the physical goods moving. It's not
Well,
just.
they are shipped. They're already over there.
Exactly right. Yeah.
But I think the policy is let's ship it and we'll just discount it till someone buys it.
Right. Okay.
Which may not necessarily work.
Comes interesting.
Especially if EU puts tariffs on it.
Yeah. Correct. Okay. So talking about trends and charts.
Yep.
It'll be good to see how gold and silver, I believe, has resumed. And we're talking about Japan, and yields are continue to go higher, and the dollar yen consolidating as well.
Yep. Let's have a look. Here we go. So let's have a look at Bitcoin first, as it's here. So a bit of a messy chart. The white stroke grey area is $75,000 up to $85,000 roughly, which is the buy area, which we've been down to a couple of times, and price hasn't been back up there before then. So this is where price gets absorbed.
Sure.
For a move higher.
Yep.
Didn't mean to move that. We'll put it back. And you can see it's trying to go higher, but it's consolidating. It needs to break above whatever this line is, say 96,000, let's say.
Yep.
To really revisit back up to 107 and the pivot point here 116.
And is that something that will happen this year, next year? People closing out positions?
Certainly by year end, the players are short of Bitcoin, so I'm suggesting that it is going to rally. Will it get up beyond there? I doubt whether it will see $100,000 before the year end.
Sure. But that may change in the new year. It
might do. But Bitcoin's 4-year cycle has ended, so it's due to go down for a year normally.
Right. Okay.
I mean, it's generated from a coincidence with the business cycle, but because the mining rewards get halved,
yes,
they've now got to cash flow all that mining activity. And the only way they can do it is by selling the Bitcoin that they mine.
Yep.
So there's a natural drag happening here.
Okay. So we'll look forward to how that continues in that vein.
Yep, indeed. Gold, as you can see, is consolidating near the high, but not doing too much. All the action is in silver. In fact, silver's really just pulling gold up because it's being sucked up by this sort of magnet effect. So this is Friday. This is the all-time high ever. And you can see, whereas gold's high here hasn't been rebroken.
No.
Silver has smashed through it, and this pattern here is an aggressive bull flag that says I'm going up higher pretty soon, unless the LBMA can hold me down.
And the driver behind that?
A severe shortage of physical silver.
Right. Being used in industrial environment, in AI stuff.
In every car, in every phone, in every weapon, in every solar panel.
Sure.
You name it, silver's got it.
Yep.
And there's a deficit for at least 5 years that I know of, where more's been consumed that's been pulled out of the ground.
Right.
Got to go up.
Yeah, of course.
Doesn't mean to say it does it now, but
no.
That's the direction for sure. So silver's looking really good. You could have a really big blow off top by the end of the year.
Yep.
Because I would suggest that any longs here won't be selling because it's at the all-time high. Why would you sell it? If anything, you would sell your Bitcoin or your gold, to protect your best performing asset, which is silver currently.
Right. So you don't see gold, as you said, taking that sort of path?
Well, it's been pretty neutral, to be honest, and held up, I think, by the silver price action.
Yep.
So I can see gold just consolidating for a few months.
Yep.
As it gets some more energy to go higher.
Yep. Okay. Brent crude?
Brent crude, yes. So we were looking for a price a lot lower. I squared up just as it broke out here, so I made a small amount of money on it. But it's definitely looking for a move back to 67,000 here, the orange line. And interesting that this is happening at this time because OPEC has stopped increasing supply, if you know what I mean.
Yep.
So suddenly it's tightened.
Yes.
Perceptibly.
Yep.
And if we get lots of rate cuts that we'll talk about in a minute, this is the really sensitive thing to inflation
Right.
coming in,
Sure.
because it's supply and demand.
Yes.
You overstimulate the economy, the first thing they're going to do is buy all the moving parts for it.
Yep.
So I'm kind of wanting to reshort it up here somewhere, at least above 67,000, but definitely glad I bought my short back. The big move in foreign exchange is really the Aussie, which has broken a lot higher. So this thicker line is a 15-year trend, and this is a trend line back to another pivot point back here, just to support some sort of resistance. But it's kept this 15-year trend at that level. So, it's broken it, but here we've broken it consistently.
Yep.
Now we've seen a lot higher.
Yes.
And this is really on the back of significant rise in Australian rates. So let me just reverse that. Let me look at 2-year rates. So we were looking as if this is 2-year rates. So we were looking as if we wanted to at least stay on hold, but now we're building in 25 basis points hike.
Yep. Possibly
not tomorrow, but in the future.
Yep.
On the back of significantly higher than needed CPI, i.e. we are now, you can pick your number, right, but it's almost twice the target.
Yep.
And the RBA is going to have to recalculate their model because it's wrong.
Right.
And GDP came in last week at 2.3%.
Sure.
Which isn't huge, but it's not the lackluster GDP that we're getting elsewhere.
Yep.
And the complete write-off that we've got in Japan.
Sure.
So
hence the attractiveness.
So Aussie rates are going up. You can see this in the 10-year, which has broken out of its wedge pattern, going back to COVID. You can see the wedge pattern here, and it's really properly broken out. So it's not quite at the post-COVID high. This was when the US had 9% inflation.
Yes.
And we're 4.75 now, and this is 5. So we're a quarter point away from that.
So that trend over both of them you see to continue?
I think if they cut rates tomorrow, this will go up to 5%.
Yes.
Because
which is, they wouldn't want that to.
They want to cut rates.
Yes.
They're politically motivated.
Okay.
And the danger is it gets really out of control quickly. When the market doesn't believe you know what you're doing, things go wrong real quick.
Yep.
So they have to be really careful. They have to be really careful what they say, probably more than what they do.
Yeah. Messaging is always important from the Reserve Bank.
That's right. So that's the 10-year. And if you look at the 30-year, it's broken out of what was quite a range-bound sort of thing for the last year. And now we're bursting up the top of it.
Right.
So we would expect the shorter end to go up more because we don't believe inflation is a global issue at the moment.
No.
So we expect a 30-year to go up less than a 10-year.
Of course.
I.e. we have to make a policy response nearer rather than further.
Yes.
Because we assume that further out everything's going to be managed.
Everyone else will.
Whether that's true or not is a different thing.
Yep.
So you can see things why the money's flowing into Australian dollars because of that yield.
Yep. So short term you see increases, but not long term.
Well, as ever, it depends what they do.
Of course.
They could lose the long end really easily by policy error.
Yep.
Not really expecting a policy error. I'm expecting a lot of dithering rather than anything
and no
else.
change.
Yes, no change tomorrow.
Yeah.
US, just for comparison, is pretty much unchanged. Red line is when Trump get in, so he's actually gone down a bit.
Yep.
Every time the Fed cuts rates, goes up.
Yep.
Rates go up.
Yep.
So if they cut it again, it's going to go up again. And that's clearly because the market doesn't believe that they need to go down.
Yep.
Have a quick look at stock markets, which have been pretty. This is the S&P 500, and you can see this is really We've tried to go down twice,
Yep.
and we can't.
Can't.
We always seem to end up near the high. I mean, that's the high. We're not that far off it,
No.
right? We've just lost the trend. And I think that's the same pretty much in the NASDAQ, which you see we're pretty much at the highs, and we are in the trend still.
Yep.
But the Dow Jones is the one that tells you exactly where it is, and it's right on the edge.
Yep.
Could go either way.
There's some announcements coming up. Do you think that would change?
Well, obviously the Fed on Tuesday will might cut 50 basis points. Doubt it. We'll be doing some balance sheet manoeuvring.
Mm-hmm.
That takes time to play out.
Mm-hmm.
Really, it's a long-term trust conversation with the Fed, because it looks like Hassett will be the new Fed chair when Powell leaves in May.
Yep.
He's a Trump man.
Right.
So now you've got Treasury running monetary policy.
Okay.
That's not good. Or put it this way, it has to be right, or
Otherwise,
it's going to be big trouble.
yes.
So we'll have to see what happens there. There's lots of GDP is going to be at least 3% sort of stuff.
Yep.
But GDP is held up by AI spending, which, because of accounting tricks,
Yes.
isn't the productive GDP we necessarily want to measure.
Yep.
And given that we don't even know that the GDP they're measuring is correct because of the government closure
Yes.
and political interference,
Yes.
who knows?
Exactly right.
So I think the danger really is that investors listen to Trump.
Yep.
But the market, which is traders, don't listen to Trump.
No, they'll listen to it.
And that there will be a big mispricing or misunderstanding by investors what's going on.
So given the new Fed is a Trump person, is there...
Well, it's not confirmed yet, but yeah.
Let's presume.
Yeah.
Does that lead to its own problem then? Because on one hand, one people are listening to Trump, and the other we're listening to the Fed, but they're the same person.
Well, I mean, they are the same person because they are both working for benefit of the government.
Sure.
But the Fed is owned by private banks, and that's a long-running problem. But Trump has taken over monetary policy because he doesn't trust Powell and what they're doing. So investors will go, 3%, GDP. The market will, we don't like this because there's one decision to run fiscal policy and monetary policy. If you get it right, fantastic. But the chance of that happening, given who's incumbent there, is unlikely.
So it'd be very interesting to see how all that plays out.
It's where you get the economy and the market pricing things differently.
Yes. Okay. Look forward to how that pans out. We touched on some announcements. So what are the announcements this week?
As we talked about, today is the RBA meeting announcement. Is it 12:30 tonight? 2:30 tomorrow.
2:30.
Yeah, Australian time. Fed announcement on Wednesday. And we've got the promise of non-farm payroll for November. I don't know whether that's actually going to come out.
And if it doesn't come out, what will happen? People have to make some decisions.
Well, I don't think many people were expecting it, and it came up on the Bureau of Labour Statistics website. So it might come out.
Yep.
But we're due to get retail sales and CPI out of the US anyway.
Yep.
But really, the numbers are ineffective in that they're old and inaccurate.
Sure.
Christmas is coming.
Yep.
Market wants to shut down.
Yep.
Positions have got to be squared and accounted for at year end.
Yep.
So there's lots of jiggery-pokery to be going on with a rampage on the 2nd of January.
So between now and end of year, we tend to see a slowdown on positions and the way the markets move.
Positions will be getting unwound because a lot of people will be having their year end and therefore their bonus measured on the 31st of December.
Yep.
Funds will be do the window dressing for stocks and stuff that they own.
Yep.
So, and normally you get a sort of contra trend going into the year end, which reverses in the new year.
Right.
But I'm expecting it to be quiet, subject to, of course, no unexpected announcements
Okay.
tomorrow or Wednesday.
Well, we look forward to those announcements, and thanks again for going through the last week. Certainly not easy in your world when you think a week ago you were thinking a certain way, and 7 days later things change. So thank you again for the analysis, and look forward to what next week turns out to be.
Awesome. Thanks, Don.
Thanks, Ian.
Cheers. Very good.